Welcome back, ladies and gentlemen, to the Digital Banking Symposium 2020. Our next agenda of the day, presented by gold sponsor Clifford, is on managing legal and regulatory risks faced by digital banks in APAC. As emerging technologies continue to disrupt the financial services industry, regulators are hot on the trails of digital banks to ensure financial stability and consumer protection. In this session, we will discuss the key policies, laws, and regulations faced by digital banks, the unique risks these can create, and how early planning and risk management can help to ensure compliance, reduce mediation costs, aid growth, and protect business reputation. Our esteemed panel of speakers will be sharing more on key lessons learned over the last year, the best organisational structures for success, external risks and mitigation strategies, emerging trends in the APAC regulatory landscape, and the opportunities these may present. We are joined today by Paul Landless, Partner, Clifford Chance, Luke Grubb, Partner, Clifford Chance, Ling Ho, Partner, Clifford Chance, Robert J. Kensett, Director, Legal and Regulatory Advice, Credit Suisse, and Carl Hollingsworth, Head of Legal and Corporate Governance, Mox Bank. I will now hand my time over to our speakers for this presentation.
Good afternoon, everybody, and I hope you've had your lunch and are full and rested. Let me just kick off by introducing the speakers. You've just had a quick summary about the session. If I could just introduce you first to Carl Hollingsworth, who is GC at Mox Bank. Second on the panel, we've got Rob Kensett, who is the director at Credit Suisse, who's responsible for all digital platforms and the legal, regulatory and advisory aspects around that. Thirdly, on the panel, we're joined by my partner, Ling Ho, who's based in Hong Kong and heads up our IP practice throughout the APAC region. And finally, on the panel, we're joined by my partner, Luke Grubb, who heads up our technology practice in the APAC region as well. So let me kick off. Ravi Menon has said earlier this year that there's probably more digitalization in the financial industry over the last 2 or 3 months with the pandemic than what people expected over the coming 5 years. There's been a real revolution in terms of digital change and digital projects within the financial services industry. So just looking at that, I just wanted to ask the panelists first, and Carl, if I could turn to you, looking at your own work at Mox Bank, what have been the main takeaways and lessons learned that you've observed? Anything you didn't expect, anything that you thought from a risk perspective in terms of your role was a surprise, or anything you would have done differently?
Thanks very much, Paul. And it's good to be here with you all today, virtually at least. So for those that don't know, Mox Bank is one of the new virtual banks in Hong Kong, a joint venture subsidiary established by Standard Chartered, which is a cloud-native bank that was launched in September, having been built over a 24-month period and intensively over the 12 to 18 months prior to launch. As a result of our very recent public launch, we have been reflecting on the lessons learned, and I've been thinking about this in some detail with respect to the legal function within the bank and how we manage our work and interact with our stakeholders. So I'll set out a few of the key lessons learned now, albeit I could probably go on for quite some time with our experience. But firstly, I would say that the key to building a bank is to establish a legal team with very broad experience and expertise as fast as you can, because there's a lot of tech work to do. There's no doubt about that. A virtual bank relies on many applications from material to less material, most of which require some form of contract, and within a large group require a lot of governance. And so to the extent that you don't have resources available to you on day one within the team, you certainly need people and experts that you can reach out to at speed. Within the Standard Chartered group, we've been very lucky at Mox that we have access to the entire group legal team. And I can say that there's not one specialist area of that team that we haven't worked with over the last 2 years to build the bank. As I like to say, it really does take a village to raise the child, to raise the bank. Secondly, there is a new way to work. And I'll right at the end of today's session, give you my thoughts on what might happen over the next 12 months. But I would say that working in the fintech environment has shown me that there is a new that people working in fintech have become accustomed to. And I think this will filter into the legal function as a whole, in-house and externally. Triads, squads, 2-week sprints, whereby you succeed or fail quickly, are a part of working life at Mox, and I think will become more common among legal practice in future. Thirdly, contract owner collaboration and stakeholder collaboration. I think this applies to all forms of lawyering, but if you're going to build a bank at speed, you need to know who your stakeholders are and work very collaboratively with them from the outset. You will often be working in the digital banking or virtual banking space with people who, in fact, haven't come from banks. And so the policies and procedures which underlie what we do may be new to them. And it's important to establish from the beginning who's going to be doing what and where the responsibilities lie. Next, a key learning for me over the last year has been that in the tech contracting space, there are two ends of the spectrum when it comes to negotiation, which each present their challenges. Firstly, large vendors might be reticent to accept the 120-page precedent that a bank offers up, which complies with its policies and procedures, understandably so. Secondly, in the fintech space, there are innovative new vendors which may not have the resources to cope with that 120-page precedent, and as a result are reluctant to negotiate it in detail, or at least will take longer to negotiate it than you might expect. And so really at both ends of the spectrum, there are issues to deal with, and it's important to understand up front where the challenges and where the delays are going to come from through no fault of the bank nor the counterparty. And then finally, I think what we've learnt at Mox is that there's a lot of governance that goes into building a virtual bank, but ultimately the layers of governance and the requirements, that the pre-launch testing that you go through, become a real strength and can become part of what makes the bank resilient. And we like to think at Mox that by virtue of having our risk management framework, which sits within the standard chartered ERMF, albeit is virtual bank appropriate, it does build trust in the product, and we think makes the bank more resilient and secure. Thanks very much.
Thanks, Carl. Thanks, Carl. I was quite interested in your point about the contractual negotiations and how you've been able to deal with vendors. I don't know, Robert, if that's been a point for you, that you've seen that in your own role.
Yeah, I mean, definitely. I would definitely echo Carl, particularly around the contractual negotiation, vendor engagement sort of piece. We've seen it very much a take it or leave it kind of approach, which requires a different approach from what we're used to with sort of general negotiation. So it's more solution orientated when you analyze the risks, and also internally when you identify controls, mitigants that could be commensurate to the risk that's perceived. I think also echoing the agility and the adaptability, that's a big change as well. And we saw it even for sort of known macro risks. So as a bank, so if you look at geopolitical risk, it's known as a bank. You wouldn't per se have seen it impacting so much on digitization. But for instance, with the EO that was issued on WeChat, that obviously had quite a large impact for us and needed to turn around quite quickly to do the internal analysis before we could sort of be comfortable to push forward. And then in addition, I would just add on to one of Carl's points is, I think there's also a paradigm shift, particularly in the way sort of more established players look at it. We don't now build for a client, we build with a client. So client usability, client engagement are kind of the core to adoption. And so from sort of a legal regulatory perspective, it's also looking and switching to try and balancing the need to disclose, raise awareness, address risks, but make them commensurate to the medium you're using. So 24-page disclaimers are not really going to work on an iPhone. So that those are kind of the key risks that I would sort of add on.
Okay, I mean, I think that point about working with clients, but also managing some of that geopolitical change, all of that spinning off new types of risks that aren't expected. I don't know, Ling, what are your thoughts around whether these projects are that much more different than others that you come across?
Yeah. So from an external lawyer perspective, I think whether we are dealing with starting something from scratch, like in the case of Mox Bank, or being part of a digital transformation strategy in a more traditional bank like Credit Suisse, I think we are dealing with quite novel issues that we have not encountered before. So, I think from my personal experience, when I am involved in transactions, each transaction can be quite different depending on the technology involved. Yeah. But one interesting point that I would like to mention is that very often the stakeholders have very, very good concepts, but they do not necessarily have the details worked out. And that translates into a lot of moving pieces, not only during the transaction, but also after closing of the transaction. So for external lawyers like myself who have to look after the documents, it's actually quite difficult to actually think about, anticipate, and cover all eventualities in the documents themselves. Yeah. So I think that's one of the risks we have to bear in mind. But Carl has also mentioned, I mean, there is this wide spectrum of stakeholders with different level of sophistication. And again, we as external lawyers, we have to bear that in mind and be sensitive to the different dynamics when we negotiate the different kinds of contracts. And we are often asked, okay, can I do this? Can I do that? Yeah. And of course, I mean, to enable me to advise whether or not we can do something, we have to understand the technology, at least at some high level. Yeah. But I think what is also very important is we have to be flexible to be able to cut through the buzzwords, yeah, and apply traditional legal concepts to new technology. And we have to bear in mind that those concepts may not have been developed for the digital age. Yeah. What this really means, and where I think we add value, is that we have to be able to identify the legal issues, but then seek the appropriate expert support. Yeah, we can no longer act in silence. I think it's very similar to at the business level where there's a lot of collaboration and working with others. I think it's the same on the legal level, is that we have to collaborate. We have to work with other lawyers to make a digital project successful.
Thank you, Ling. I mean, it goes back to Carl's point about it needs a village to build a digital bank, and this idea of collaboration, but also working with the client does mean that there's a new way of working, and let's talk more about that. If I could just ask Robert, I mean, again, in terms of what was it that's important around making these projects successful, how are you collaborating? What's the organizational difference between any normal bank? What makes things unusual or distinct around what you've been doing as to how you've been managing those newer legal and regulatory risks that you've been facing?
Yeah, I guess I think everyone's aware digitization has been ongoing for some time as a sort of a general trend. And at CS, we were a relatively early adopter of this with sort of the digital private banking offering we had. And then more recently with our CS chat tool, which obviously in the current climate, as you sort of mentioned, has been demonstrably positive for us as a bank. I think core to this has been kind of an evolution of the traditional structures that we've had in place, and obviously the approach that we took to change management. So one is kind of looking at clear senior management and business sponsorship, which is really core to driving change. The second is obviously a lean and flat structure within the change organization, but with empowerment. So they have direct accountability and common goals to achieve what they want to achieve in sort of timely manner, which is sort of key. I think within a CS perspective, there was sort of two key realizations through the process. And there's two new teams that we've actually created specifically within the digital structure. One is kind of the team that I lead, basically providing legal and regulatory bridge between sort of the tech and the business guys and obviously our second line functions, so our legal, in-house legal, risk guys, compliance, to try and deliver that compliant and sustainable change for the organization as a whole. And second, equally as important, was the creation of a new team, which is kind of a business integration team, whose sole role is effectively to drive internal awareness and also the cultural change to facilitate true adoption of digitization. And that's really important because if our internal staff don't take it on, it's very hard to get the clients to engage. And I think, as you said, with a village, we don't only look internally, we've also got neighbours as well. So we also work heavily on legal advice for opinions and things. So obviously Paul and Luke have been engaged heavily on some of our programs. We've got tax and professional service advisors to look at the relevant conditions and considerations associated to what we're trying to do. Plus also industry associations, and I'd call out sort of fintech committees under PWMA, ASIFMA, who facilitate platforms to collectively discuss, which I think is really important as the industry tries to grow.
Thanks, Robert. Carl, villages and neighbours, I heard, but I think collaboration is key. But I think one of the things that stood out for me there was Robert's point about lean and flat structures that have got empowerment. Does that resonate with your own experience at Mox?
It does. As you might expect, Mox has a very lean workforce.
Yeah.
There are some 150 to 200 people directly employed by the bank, depending on the definition you use. And it is all very flat. As someone once said to me, for a very clever person who runs our call center, mentioned that never before had he had so much access to the so-called C-suite people. And it just occurred to me that everyone has access to everyone at Mox because we're all on 2 floors of a building. Quite literally, someone will sit down next to you while you're on a telephone call, wait for you to finish the telephone call, and then your next piece of work starts when they hand it to you, as it were. But I just wanted to pick up, in fact, on a couple of points that Robert made, which I think are instrumental to the way we work at Mox. I mean, Mox was always intended to be structurally and culturally distinct from Standard Chartered, notwithstanding that we are part of the group as a controlled subsidiary, and all of our risk management framework, policy standards, DOIs, and guidance notes are effectively a subset of Standard Chartered. But I think our cultural separation from a mainstream bank has been one of the key strengths for us and key to our success thus far. We are led by a very experienced leader of the virtual banking space in Dennis Guven. He set a culture at Mox which you can really see and feel, and I invite anyone on this call to come and visit us at Mox if you happen to be in Hong Kong once they turn the planes back on, or if you're based here now. And to one of the points that Robert made around building for the client, that is in fact the approach that Mox took to the launch of our bank. We surveyed a very large number of people in Hong Kong to work out what it was that they wanted from banking. What would they fall in love with as a product, as a virtual bank? And we call it trying to win the heart share of the customer. So our model is very much based on producing things that the customer wants, building for them to build a bank that they genuinely love. And then a second point that Robert made, which goes to the lean flat structure we have here. We have this principle that if you build it, you then own it. We have a number of squads at Mox, some 30 odd squads, all building and now managing various parts of the business, including the products. If you are a squad leader or a business owner, you are responsible effectively for that part of the business. You are in a sense, the CEO of that part of the business. Moving on to a couple of points directly about the lawyering at Mox, I would say that the trusted advisor relationship with our external counsel has moved on a step more toward genuine collaboration and partnership. A small group of people working relentlessly to achieve a lot in a short space of time requires expert legal advice and external lawyers who understand the challenges you're facing and genuinely want to help you find an innovative solution. And certainly we've done a lot of work with people like Ling at Clifford Chance and have seen that relationship develop. There are other examples I could provide. And then just finally on the industry body point, in Hong Kong, the Hong Kong Association of Banks has a subcommittee formed of representatives of the 8 new virtual banks. And we've already seen the key benefits that type of subcommittee can produce. It was always going to be the case that mainstream banks react to the new challenge of virtual banks. And so it's great that there are these industry bodies where stakeholders can get together to discuss the challenges being faced as an industry, and to the extent possible and compliant with the law, to help devise industry approaches to those challenges to lead to success.
Thanks, Carl. Lute, what were your thoughts about Carl's point about being culturally separate and very much a different organisation, villages, neighbours, and squads as well?
Squads. I haven't come across a squad. I think I'd echo all of that. It's a very different experience working with a digital bank as external counsel from the traditional kind of bricks and mortar bank. The first thing is the sort of look and feel is predominantly of a tech startup, not of a bank. Obviously, it's highly regulated, but there's that feel of a tech startup. I think the key differences I've seen, the lean teams, I definitely echo that. Everybody at the bank seems to wear one or more hats. I'm sure my fellow panelists would agree with that. They're covering sort of business development, procurement, legal, regulatory. Everybody's covering a number of different things. And I think being part of that team, we very, very much feel as external counsel, very much part of that. Obviously you're expected to provide pragmatic kind of speedy advice, but you're drawn more into the business objectives, direct inputs, kind of, part of the solution, part of creating the solution, you often feel. I think we talked about vendor engagements are very different, but they're much more collaborative. We've been on calls with vendors where the solution's being worked out collaboratively with the vendor and the bank, which is again very different, and very much getting into the weeds on the tech in terms of data flows, etc. And the other thing I would echo is around the customer experience. Very much more focus on customer experience, kind of flexible around customer use cases and changes to those use cases. So you see sort of rapid changes to accommodate roadblocks when we've come up against legal issues, and a strong desire to kind of give customers more choice and better experience. And I think that's, the opposite is often true when I've been involved in big, complex, traditional bank projects where the kind of first thing that is looked at is kind of risks and policies, and the second thing is customer experience. It's the other way around very much with digital banks. But in a nutshell, I think those are the things that I've noticed as external counsel.
Thanks, Luke. Let's look at managing external risks. There was a survey last year with about 600 respondents that people last year were expecting, about 70% of them expecting a lot more fraud around increased real-time payments, mobile payments, etc. That was last year. And then before the pandemic, this year in January, we had a survey by a Silicon Valley sort of consultant looking at APAC banks, and around 78% of APAC institutions just at the start of this year had already seen an uptick in fraud around mobile payments and other real-time and peer-to-peer activity. I don't know, Ling, Luke, what are your thoughts around, from where you are, what sort of risks you see as more acute, more unusual, more pronounced about digital banks than other businesses?
Okay, Luke, shall I start first? Yeah. So I think it's interesting that you mentioned fraud, because I think there's much more investment into using and developing AI for fraud detection, and as a result of that, I think we will see more regulations around AI Yeah, so I think one risk I think that digital banks would face are more regulations, and it's just not, and it's also much more in the sector because banking regulators have been very active in issuing different kinds of guidelines and regulations on quite a wide range of topics, ranging from outsourcing to use of AI to payment systems. Yeah, and on top of that, of course, the banking industry is very stringent onboarding and AML requirements, complicated these days by US sanctions. Yeah, so I think that's one of the risks that I see. Of course, the risk that we have already mentioned with third-party relationship. Yeah, because that give an increased level of operational and reputational risks. Yeah. Another area that I think is interesting to watch out for in APAC is actually the interplay between antitrust and data. I mean, this is an area that is quite active in the US and in Europe, not so much in APAC yet, but I think it would be interesting to see how competition regulators would actually approach the subject in the future in APAC. Luke, what do you think? More on the cyber side, maybe?
Yeah, sure. Thanks, Ling. Yeah, I was going to talk more about. I mean, I think the two sort of key risks that I see from a sort of technology and operational perspective are that obviously cyber threats and damage to reputation, but also IT failures, and I'll talk about that in a bit more detail. But I mean, I think cyber remains the kind of biggest threat to all online businesses. You know, obviously, with a digital bank where customers can't access the app, they can't undertake banking business. There's no fallback to any offline operations, branches, etc. So that and the reputational damage is huge, and I'll, you know, we've seen that in other markets. I think it'd be useful to kind of look outside APAC and look at where some of the so-called neo-banks or digital banks have run into problems in other jurisdictions. So in the UK, I mean, the neobank environment is a lot more mature. It's been running since about 2014. You've got a number of startup banks, Monzo, Starling, Revolut, etc. What's interesting, I think, is that some of these banks have run into some issues recently, and particularly over the last year, where they've hit the headlines for all the wrong reasons. Monzo has had a series of IT failures where their bank accounts have been, the app has been offline for kind of hours and even days. And then they've had some issues around kind of over-enthusiastic freezing of accounts due to suspected movements of money, which is kind of, they're blaming on their AI engine, which is quite interesting, Ling, that you brought up the AI issue. And I think also there's obviously been a significant impact of COVID on their cash flow and market value. But I think in terms of lessons learned from these banks, from looking at what they said, is, you know, they built new platforms from scratch, cloud native platforms often they've outsourced key components to third parties, and certainly Monzo said one of the learnings was that they should have brought more support in-house for key components, and that's actually caused quite a few of their problems. But you know, having said that, Monzo's obviously had some reputational damage from that. But other banks, you know, Starling Bank appears to have done very well, and in fact they were part of the whole UK furlough scheme, so they've actually come out of it as a bit of a winner out of this. And obviously, you know, IT resilience issues are not alone. The digital banks are not the only ones suffering from that. You know, you've RBS and TSB, significant failures. But I think the problem is that it's about perception, that customers expect these digital banks to be more resilient from a tech perspective. They're much more high profile, and the tech offering is front and center. So when the tech offering fails, it has much more of an impact on the reputation. So I think those are two significant issues which you know, could be faced by digital banks in APAC.
Carl, would you agree with that? I mean, there's been so much emphasis recently by the regulators on operational resilience, but at the same time trust as well, and some of that trust goes to you know, IT resiliency as well, more broadly, as well as security. Is that very much a sort of existential defining sort of item for you at Mox?
Without a doubt, Rudy. I mean, I would echo all of the points that Luke made about the way you build and then run a virtual bank. From what I've seen so far, cybersecurity is clearly a major challenge for us. As Luke said, if something goes wrong, the customer can't walk into a branch to sort it out. And there's just so much focus on virtual banks as a whole, but the new ones in particular. And of course, much like so many aspects of life these days, the social media commentary is immediate. Statistically, people don't often sit down to write long complimentary messages on social media, but they will very quickly voice their concerns if they have any. That has become a part of banking life in Hong Kong, and I'm sure it's the same in every other market. And I think it really is about balancing simplicity and convenience with data protection and cybersecurity. The whole point of virtual banks is that they are easy to access and to use, but of course they must be absolutely secure and safe for the customer. And the approach taken by the HKMA has been it's been proactive and understandably cautious to the launch of the virtual banks in Hong Kong. There are a number of independent assessments that each organisation must go through, and it has been a very positive and, as I say, collaborative experience working with the regulator here to ensure that banks launch when they are ready, following the right controls being put in place, tested, and then retested, as it were. And I would say at Mox, a key part of our workforce, going to the point about whether you should have more support in-house, of the rather lean team at Mox, a significant component is comprised of our digital and cyber trust team, which is led by a very experienced sort of ICS expert in David Walker. And I would say every organisation needs a David Walker. He's seen the risks and the incidents before at other organisations, and now he knows what to look out for, how to build to make a resilient bank, and to be ready for the issues that you will face along the way. I mean, as David likes to say, the idea is to promote trust through our virtual journey to enable innovative, reliable, and a secure banking service. And that's what it all comes down to, really.
Robert, what are your thoughts about this idea of balancing these different priorities? To Carl's point, quoting his colleague David there, the need to build something secure with trust, but at the same time looking for a system that's innovative, where you're building with the client and delivering that client sort of expectation.
I think that's exactly it. So it's obviously balancing those core pillars that underlook change. So I guess you've got the risk that we've highlighted. So you've got ICS, you've got data loss, the accuracy in the way you handle data, your regulatory risk, your BCM, so your business continuity management risk. But then also, you've also got to look at the evolution of clients and their habits and kind of what they want. And that kind of goes back into the reputational pieces. I think as Carl was highlighting, is clients are very quick to tell you when they don't like something. You don't tend to get too many glowing testimonials too quickly on the positive side. And I think that's the balance, and you must work to streamline. And that's not just with clients as well, it's also with internal. So you also need to make sure, particularly for us in the wealth management space, we see it very much with balancing internal stakeholders and external. So our relationship managers also need to be digitally enabled, and it's balancing that as well that we see as one. And I guess the second one is making sure you stay up to date with innovation and tech change, but balancing the view that these may be a panacea vis-a-vis the risk that they may bring. And obviously, in a lot of times, they are not as tested as some of the more traditional pieces. So it's balancing those risks again around new technology vis-a-vis what you want to achieve and trying to get sort of a sustainable outcome.
Thanks, Robert. I want to push you more on that point around how you maintain that balance, and you're keeping your eye on new developments, new technologies, new ideas, but also regulatory change. In terms of policy development, regulatory reaction or overreaction to technology incidents that Luke has sort of talked about, as well as Ling's point about new AI regulation, managing some of that the regulatory movement, going forward. It's got to be, something to keep an eye on. I just want to bring out one interesting stat that I saw at the start of this month. There was a survey by Visa which pointed out that looking at most SMEs in Singapore and in ASEAN, about 2/3 expect digital banks to be far more convenient than a traditional banking model, and that about almost 90% of SMEs are ready for an all digital platform interaction. So there's also balancing for that increasing client desire. You talked about building with the clients, and so that client hunger, I imagine, is going to increase. What are your thoughts about your crystal ball looking forward as you're managing all these issues? I'm asking the impossible, Robert.
I guess the digitization, as I said before, is definitely a trend, and it's definitely going to continue. But I also see it's going to be accelerated. But with that, I think the nature of digitization will become more disciplined. So I don't think you're going to get a broad net anymore of digitization and us try to digitize everything. I think there's a greater focus now on demonstrable enhancements with the client in mind. So always designing for a client and to get the best outcome for the client. And you'll also see growing collaboration with fintechs and smaller digital service providers, I think, as we spoke to earlier. So for CS, obviously, we've worked with Canopy. We are currently working with sort of Privé. But I think, as you said, regulatory guidance within the APAC context, I think we've seen it this year. Hong Kong and Singapore regulators have been heavily pushing out new guidance, pretty much just to evolve and to keep pace and attempt to address some of the risks that are associated with digitization. So I think we've spoken about outsourcing, the use of cloud, AI, even down to similar things like the SFC recently on sort of e-documents and e-document services. But looking forward, I also kind of see governmental and reg-driven data utilities growing a bit more. So your KYC solutions offered by Hong Kong government, Singapore government, as well as if we look further afield to Europe, open APIs growing as well and coming to the fore and expanding in APAC.
Carl, what are your thoughts? Actually, it's interesting that Robert mentioned that because we're talking about KYC on the next panel, but looking forward, what are your thoughts around opportunities on the horizon or risks or regulatory change that you've got your eye on?
Well, I mean, as Robert said, and as you said prior to him, everyone is ready for digital interaction. And what we've seen in Hong Kong is that initially people don't really understand, and it's understandable that they don't understand the difference between a traditional bank that has a mobile app and a virtual bank. But once you experience the ease of use, the interaction, the customer designed product, particularly for the next generation of hopefully mass affluent customers, you immediately see the differences. And sort of as to what I think the future holds, I mean, I would say, to me, the experience of working in a virtual bank over the last 12 months has really opened my eyes up to the way we can all be working. It won't be to everyone's liking, but the environment is truly dynamic, demanding, and intense. But it proves that a small number of people can achieve a great deal in a short space of time with the right leadership, the right culture, and all motivated to achieve things. And so to that end, I agree that the regulations will increase and that digitization will come about in a more controlled way, but there's nothing that's going to stop it. And I think over the next 12 months, as a result of many factors, we're just going to see more cloud native businesses and more agility in the workforce, including within law firms and within in-house legal practices.
Thanks, Carmen. I think one area that I'm interested in is also talent around, disputes around talent, disputes around ideas, keeping talent, managing workforces. I think that's another area of risk and dependency, if you like, in the business. But I don't know, Ling, what your thoughts are around where do you talked about AI regulation? What areas sort of interest you? What are you looking at going forward from where you are?
I think that data. We have been talking about how important data has been. Yeah, I think it will become even more important. And whilst in the past maybe there's a lot of monopolizing of data, yeah, and companies trying to keep the data to itself, I think there will be much more sharing of data, collaboration and joint venture being set up in order to gain access or develop data. Yeah, and to use the data to commercialize the data and make money out of the data. I mean, the data is used for all sorts of things, for AI development, and fraud detection is one area where AI and data is very important. And I think that would be the trend, that there's more collaboration and joint venture being set up in order to gain access to the data and to commercialize the data.
Okay, that's interesting, but at the same time, of course, increased enforcement, no doubt, I expect over the coming months, more hawkishness from privacy enforcement authorities. Luke, what are your thoughts over the next year in terms of, or so, as to your thoughts around the horizon? Where do you see opportunity? Where do you see, risk and new challenges?
Yeah, I mean, I guess I've already talked about the negative side of cyber and whatever, but I think there will actually, on the data privacy side of things, I think clearly there's going to be some developments, increased enforcement in the region, and we're already seeing that in both Hong Kong and Singapore, in terms of tightening up of breach regulations and all of those issues. So that's definitely a trend. But I think on the sort of more positive side of things, I think the digital banks have already had a big impact. Globally, in kind of shaking up product offerings of traditional banks. They've shown a new way, and I think that what we're seeing is therefore traditional banks are offering new products. They're trying to improve customer service. There's better choice for customers out there. But it's very interesting what Carl was saying about the fact that there's a very big difference between a digital bank being set up and a traditional bank setting up its own app. And a limited digital offering. I think that's where there's a real difference, actually. It's very interesting. I mean, again, looking at the UK, RBS launched a digital bank in November last year, and then closed it again 5 months later. And interestingly enough, a lot of that was because, obviously because of COVID, there was a big impact on it. But a lot of that was about retaining talent, going in the right direction. What was their mission statement? Why were they different? So I think it's really interesting that what Carl was talking about there. So I would expect these true digital banks to be out ahead, I think, of just the limited digital offerings from traditional banks.
Okay. Well, thank you, Luke. I mean, we're coming to the end of our panel, and we've covered quite a lot of topics in terms of some takeaway lessons learned, what has been useful in terms of organizational design and how teams have had to collaborate, but also tried to really map what have been the key risks that are more unique or more pronounced for digital banks, as well as on the horizon areas of change from a legal and regulatory perspective to keep an eye on. If I could just finish the panel and just ask each one of you to give a prediction for where we will be a year from now. Anything you like. I did ask the panelists if they wanted to predict who might win the Premiership, or what restaurants might be opening, or what chefs might be in the region. But if I could just kick off, maybe just go Carl first, then Rob, then Ling, then Luke, and 15 seconds each, please. Carl, go ahead.
Okay. Firstly, Liverpool will once again win the Premiership with its proud Standard Chartered name on every Guernsey. And secondly, I think over the next 12 months, we're going to see a proliferation of virtual banks and virtual bank-like initiatives throughout Asia. So watch this space.
Thank you, Carl. And I think definitely Indonesia, Malaysia, Philippines, and Vietnam wants to watch for that one. Thanks. Rob, over to you. 15 seconds.
I would say that Arsenal definitely won't win the league. However, I do think Aubameyang will win the Golden Boot. And looking forward in the banking space, I would probably say definitely significantly more digitalisation to come, and you'll see a massive uptake, more from obviously traditional players, and I think in the wealth management space, definitely more digitalisation.
Thank you, Robert. Ling, over to you, please.
Okay, let me start with football first, soccer first, or whatever you call, because I have to agree with Carl, because otherwise it will be chaotic at home. Okay, Liverpool is going to win this year again. So I think we will have see more discussion around climate risk will be back on the table in the US. So I'm trying to imply something there.
Interesting and very, very poignant given today's timing. And Luke, over to you, Luke. 15 seconds, please.
No soccer predictions because that's not my thing. But I think England for Grand Slam for the next Six Nations, and hopefully a shorter Six Nations, not drawn out over a whole year, would be nice. But yeah, in terms of fintech collaborations, I think there's going to be increasing fintech collaborations between kind of bricks and mortar big businesses and the big tech giants. And we advised on the Yoma Ant deal in Myanmar, which was groundbreaking. I think we're going to see more of those next year. Actually, I think there's going to be a lot more collaboration, definitely in Southeast Asia.
Okay, well, with that, if I could just on behalf of everybody who's watching, just say thank you to Carl, to Robert, to Ling, and to Luke for a very full and well-rounded session. We've heard about soccer, we've heard about all sorts of sports predictions, as well as villages, neighbours, and squads. But I'll finish there, and I think the next session is on KYC. Thank you very much, everybody. Goodbye.
Thanks.
Thank you.
Thank you.
Thank you to our speakers for that insightful panel on the checks and balances of the changing digital banking landscape in APAC. Next up, we have frictionless payments and digital KYC experience, fast, furious, and compliant, presented by Acuity. We have an esteemed panel that will be discussing ways in which companies can reduce operational bottlenecks around customer onboarding and failed payments and enhance UX, while being compliant with the myriad of regulatory obligations. Do click on the next session button located at the bottom of this page, and I will be seeing you shortly at 1:30 p.m.